All right, let's talk about what just happened in the Indian market today, April 16th, 2026, because wow, what a roller coaster. It kicked off with a huge surge, even hitting a new record high, but then it just fizzled out, ending in the red. It's one of those days that leaves you scratching your head, so let's dig in and figure it out. So that's the big question, right? What on earth happened? How do you go from a record high to a negative close all in a few hours? If you just look at the final numbers, it seems like a boring, slightly down day. But trust me, that's not the real story. Underneath the surface, there were some major clues about what's really driving the market. We're going to peel back all those layers. So here's our game plan. First, we'll look at that wild intraday reversal. Then we'll dive into the sectors, because that's where things get really interesting. After that, we'll check out the specific stocks that made waves, decode the market's mood, see what was happening globally, and wrap up with what to watch for next.
All right, let's jump right in. This day was a classic tale of two halves. Okay, so when the closing bell rang, this is what we were left with. Both the Nifty and the Sensex ended up slightly in the red. I mean, look at those numbers. A drop of just 0.14% or 0.16%. You'd glance at that and think, must have been a pretty quiet day. But nope, not even close.
Because check this out, the morning was pure optimism. The Sensex blasted off, opening up nearly 570 points. Everyone was feeling good thanks to some positive cues from around the world. But then the afternoon hit, and the vibe completely changed. All those early gains, gone, just vanished. It was classic profit booking at a record high. Plus, you had the pressure of weekly expiry pushing traders to sell. And we're not talking about a small dip. From its highest point of the day to its low, the Sensex fell more than 740 points. I mean, that is a huge swing. That's some serious volatility. So it really makes you wonder, what was going on beneath the surface to cause that kind of drop? Well, that volatility points us to our very first clue, and to find it, we need to look past the main indices and dig into the sector-by-sector performance. And this is where the plot really thickens. You had this weird split. The main indices, the Nifty and Sensex, were down, right? But the rest of the market was actually up. The mid-cap and small-cap indices had a solid day, gaining more than 0.5% and nearly a full percent. So what does that tell you? The selling wasn't widespread. It was really targeted at a few big, heavyweight stocks. And you can see that conflict playing out perfectly in the sector charts. I mean, look at this. You had metals absolutely flying, up over 1.5% thanks to high global prices. IT had a great day too. But then you look at private banks, and they were the deadweight, dragging things down. The market was completely torn, moving in two different directions at once. So to really get what was happening in those sectors, we have to drill down another level, to the individual stocks. Let's look at the real movers and shakers. On the winning side, you had some big names. Adani Enterprises popped more than 3% because people are expecting some great orders coming in. Hindalco was right there with it, up almost 3%, just riding that strong wave in aluminum prices. These were the heroes of the day, the ones keeping the rest of the market afloat. So who were the villains dragging the main indices down? Well, it was a few usual suspects, the heavyweights. HDFC Bank, a giant in the index, dropped almost 2%. Everyone's getting a little jittery waiting for their earnings. Then you have Titan, which fell because of worries that a bit of inflation might stop people from buying fancy things. And since these stocks are so huge, when they stumble, they can really drag the whole index down with them. Okay, so we've seen what happened, where it happened, and who was involved. Now it's time to put all the clues together and figure out the big question. Why? What was actually going through the market's minds today? It really boils down to four main things. First, you just had plain old profit taking. The market hits a record high, people cash out. Makes sense. Second, those inflation worries popped up again and spooked the consumer stocks. Third, and this one is super important, we saw a clear rotation. Money was literally moving out of banks and being put to work in metals and IT. And finally, there was a hidden force at play, providing some support. And get this, even though the market closed down, the big institutions were actually buying. Both foreign and domestic funds were net buyers, snapping up a combined total of over 1,200 crores worth of shares. That's incredible. That buying pressure is probably what kept the market from falling even further. For them, this dip was a buying opportunity. So why were they so optimistic? Well, this quote from Dr. V.K. Vijaykumar really nails it. He says the market is basically betting that the conflict in West Asia will end soon. The big money investors are looking beyond today's headlines. They see a resolution coming, and that's why they're willing to buy into the volatility.
Of course, what happens in India doesn't happen in a vacuum. So let's zoom out for a second and look at the global picture, because that's what gave us that massive boost at the start of the day.
I mean, the setup was perfect. You had Wall Street closing at a record high, markets across Asia were all looking strong, Europe opened higher, also feeling good about potential ceasefire news, and the cherry on top, oil prices had cooled off a bit, down to about $95 a barrel. That was the jet fuel for our market's morning rally.
And one more important piece of the puzzle, the U.S. Fed. They decided to keep interest rates right where they are at 3.75%. For global investors, that's a good thing. It means no surprises, no sudden moves. It's a signal of stability, and markets love stability.
So that was today. The big question now is, what about tomorrow? Let's wrap things up by looking ahead at what's on the horizon. Okay, for all of you watching the charts, here are the key levels for the Nifty. That big round number, 24,000, is your immediate support. If we fall below that, watch out. But if we can break through the resistance at 24,350, that could be the signal that the bulls are ready to run again. And keep these stocks on your watch list for tomorrow. HDFC Bank is the big one, with its results coming out. ICICI Lombard has a key shareholder vote that could move the stock. And, you've got to keep an eye on the metal and Adani stocks. They'll be moving based on whatever happens with commodity prices and geopolitics. And all of this leaves us with one final massive question. The market is right up here at all-time highs. So was today's craziness just a healthy breather? A quick pause before the next leg up? Or was that a warning shot across the bow, signaling that things are about to turn? The underlying clues seem pretty optimistic, but man, that volatility is a stark reminder that in the markets, nothing is ever guaranteed. Thanks for tuning in.